Okay. So hey guys, welcome back to TradFi and Bitcoin Club. Today we will be discussing about what's happening in gold and silver markets and why is Bitcoin is lagging. So this whole session will be based on the article of Michael Howell. He wrote an article about why is Bitcoin languishing and metals are like moving up. So basically, what is happening, just coming to the debasement trade, giving an idea to the people here. I think most of us know what is debasement trade, but yeah, just to give an idea, basically, debasement trade is a trend, or like you can call it as a investment thesis, which is like investors try to hedge against inflation and monetary inflation, like money printing. So when people enter into this debasement trade, they generally tend to buy gold and hard assets, or maybe commodities as well, just to hedge themselves from central bank policies and like fiat inflation and money printing. So roughly, this is debasement trade. Now, what's happening in like gold markets? Why are gold and silver moving, but Bitcoin is not? Like Bitcoin is just chopping off sideways. I think there are many factors which apply to these things, but yeah, on the whole, this thing is a China centric thing, or maybe this is what Michael Howell has written in his article. uh, so basically what China has done is, uh, China has printed, or like they have injected liquidity of nearly 1.1 trillion dollars in the last year. Like in just a single year, the PBOC, People's Bank of China, has injected this much amount of liquidity, and uh, all this liquidity is going into hard assets, but not going into Bitcoin. Why? Because China's shadow ban, you can say, like they have banned investing in Bitcoin in mainland China, but in Hong Kong, people are free to. But because mainland China is banned, due to this, money is like liquidity is finding itself difficult to go into Bitcoin markets and like push up the price. This is what Michael Howell think, uh, basically. And there are some people like Eric Balchunas. He is senior ETF analyst for Bloomberg. Like so, what he's saying here is, if you can see this chart, Bitcoin front ran like starting from 2023 to like in 2025, like Q4. So Bitcoin front ran from around like it went up 429%, and gold and silver were lagging at that point in time, but now they have started to catch up. So this is what Eric says, but there are some disagreements with Eric. Like generally price is driven by narratives and not what is happening. So the current narrative is more towards gold and silver. That's why gold and silver prices are like leading. Kind of like makes sense, but he's trying to make a point here for Bitcoin. Like Bitcoin has already made a 429% run up, but if we see this run up from last cycle top, like from 2021, then we can't see a huge move in Bitcoin's like last 2021 top was, I think, 69K, and 2025 top was around 126. So technically, how the given the volatility of Bitcoin and how it runs up very quickly, I think that we have this muted cycle. We have seen the muted cycle. I don't know why, but yeah, if you see from rock bottom, things are different, but technically speaking, Bitcoin is in the like kind of bear market when you price it in gold. They are like today only Bala sent something in TradFi Bitcoin channel where he makes a point where power law in Bitcoin terms is not like it does not really make sense, but because there are not a good number of volume in direct BTC gold trading pairs. So essentially, whatever we see in power law is BTC USD and gold like XAU USD. So that's a point to make in there. But um, if we see XAU BTC, XAU, so XAU is basically or BTC XAU, we can see BTC XAU. Yeah. So as you can see here, it looks like we are in the bear market when we compare Bitcoin in relation with gold. So if I can measure this downturn from the top, or let's say this top, they are literally down nearly 54% or something around similar, something similar. So it would be more higher if we consider the Donald Trump election thing and uh, he announced some bullish narratives related to strategic Bitcoin reserve and what else, but it's still pending and not happening. So when we compare Bitcoin's price with another hard money that is gold, we are literally down 58% or 60% from the top. So now coming to uh, Michael Howell's article and what he thinks and what not is the market contradictions. First, we will come through the market contradictions. What's really happening? So surging assets, gold, silver, copper, all other metals are surging. If I can show you the chart, maybe I will show you here only. XAU, USD, then silver is also. So if you can see here, gold is literally showing this J curve kind of thing. And it's up, nearly up since 9 days. Continuously 9 days are up for gold, and for silver, silver is also like pretty crazy run for silver as well. So if you can see here, just if we check from 1st Jan of 2026 from here, silver is already up nearly 60-ish percent. So what's really happening in silver? One thing that I noted in silver basically is this Shanghai silver premium has hit a record high of nearly 12%. So uh, we did one session around like when gold started to move from 3,000 to 4,000. I think it might be a 6 month old session, and at that point we discussed physical settlement of gold, which China started. So there are some exchanges like COMEX and LBMA in London. So these exchanges are like paper settled. So whatever settlement that happens in gold and silver in COMEX and London, COMEX is US exchange of commodities market exchange, and the other is London Bullion Market Exchange. So here mainly the settlement was happening in like paper derivatives, but At that point in time, Shanghai Gold Exchange and Shanghai Silver Exchange started to settle in like physical. This they allowed physical settlement. So because of this, at that point in time, people started to do an arbitrage, like buying in um, what can we say, buying in comics and like London exchange and then selling in this Shanghai selling in China's market. So this made an arbitrage thing to happen, and now this arbitrage is even more profitable because silver is literally like 12% trading at a 12% premium in Shanghai Silver Exchange. So this is the main reason why we are seeing crazy moves in these metals. Uh, Michael Howell makes one more point here uh, about why is this happening. uh, Before going to that point, coming to like we covered this point, surging assets, gold, silver, and copper. I'm not like I don't want to go into copper. Then languishing assets, Bitcoin is like languishing. It is not. It's sideways basically. Then stable assets, bonds are stable. So it's weird. Bonds are stable. If I can show you the bond chart, US 10-year treasury. So like it's in sideways. So the debasement trade, what generally happens in debasement trade is uh, like bond market is panicked, gold is surging, silver is surging, hard assets are surging, Bitcoin should also surge. But what is happening right now? Gold and silver are surging. Basically, they are behaving how like they should behave in theory, and in practical they are behaving likewise, like how they should behave they are behaving. But Bitcoin and bond market is not panicking except Japan. So Japan, like the yields for Japanese bond is going up. When yield goes up, bond prices crash. So it is happening in Japan, but if you see in the other Western markets, bonds are not crashing. So this debasement trade is only happening with gold and silver and not happening with bonds and Bitcoin and other cryptos. Generally, if you see the historical data, Bitcoin is crazily like correlated with the liquidity. So, as the liquidity rises, Bitcoin moves very like in a crazy fashion, but that's what not happening. Uh, so this is what he tries to say in the first part of the article. Then comes what is driving the gold's price. So basically, he makes a point, basically exchange rate effects, managed Asian rates versus USD. Now he used this term of managed Asian rates. I'm not too sure, like, are Asian rates managed or are Western rates managed? Because Asian markets like China, they are allowing physical settlement. So I think physical prices matter more than like paper derivatives prices. So kind of counterintuitive to why he wrote managed Asian rates. I think he wrote this because this China did 1.1 trillion of monetary injection of liquidity, and that liquidity is only going to gold and other assets, physical assets like silver and all, but it is not moving in uh, other assets like Bitcoin and maybe cryptos because of shadow ban which China has. So this is one of the reason that makes sense that he is saying that managed Asian rates. But when he says managed Asian rates, he uh, is somebody's mic on. Like, please mute yourself, guys. Yeah. So he kind of says that managed Asian rates means is China manipulating the gold price? I don't really think so because China has
Amdev,
made gold settlement.
I,
Yeah,
I think he refers to the FX rates actually, exchange foreign exchange market. So China's CNY being managed against US dollar. Similarly,
that can be, yeah. That's a good point. So uh, CNY, they are managing CNY. True, they are managing CNY. So Chinese renminbi is managed. So that may be a thing. That could be a thing. But uh, on this note, what do you think about, because China is settling gold in physical settlement as compared to like London and COMEX. I think physical settlement is making more sense for me here.
no, so
What?
COMEX and LBMA also allow physical settlements, but along with
But
physical settlements, they also have
yeah,
cash settled futures. So there is physical delivery available even in COMEX and this thing. Uh, the reason there is such a big difference, I guess, is because of the demand in China for
yeah, the
silver.
1.1 trillion liquidity which is made available there.
Yeah, I think there's just a lot of demand, and then there's also China has imposed an export control on silver.
Yeah,
So
true.
they have, in some sense, trying to curb export so that they can supply in-house. I guess in
Hmm.
the future, that came in the beginning of the year or so.
Yeah,
Uh,
yeah, yeah.
that's with their
Also,
things
I think
silver, but nothing
much,
about gold.
much part of silver mining like refineries are under Chinese uh, Chinese share in those companies is much higher, and uh, a good amount of silver which comes to supply is being mined by Chinese companies. So maybe something around along that lines as well. But yeah, I think the main reason here is the 1.1 trillion dollar liquidity which they have infused in the system, but uh, the only place where it is going is into gold and silver, and also it is going into the Chinese markets as well. We can't. So here is one of the chart where he explains Chinese market. Yeah, Shanghai. So if you can see this chart, Chinese stock market index is also going up. So this gold's rise and silver's rise is, this is what Michael Howell says. He's saying that this the gold's rise is much of related to China's liquidity injection and not kind of related to the debasement trade, which is more famous term or a trendy term in global investment landscape. This was one of the chart that I wanted to show, but yeah, China specific demand as a price driver. So yeah, so China specific demand is one of the main reasons why gold is surging. Coming to now global liquidity trends, uh, showing again the liquidity chart here, which he
Sorry for
mentioned.
asking, like, have we covered
Yeah.
why silver is surging?
Not yet. The
Okay,
main
okay.
main reason I talked about is the Shanghai Silver Premium. So you might remember, Saurabh, that we did a session in maybe 6 or 7 months ago. I do not remember exact date, but uh, China has made a physical settlement of silver possible. So physical settlement is also possible in the COMEX and London exchanges, but the volume which is happening in physical settlements is much higher in Shanghai exchange, and currently there's a premium in Shanghai Silver Exchange of 12%. So people are arbitraging this price, like, and that could be the main driver which is driving silver's price. But what I mainly think is the 1.1 trillion liquidity injection which has been done in uh, Chinese market, and that money is not allowed to go into Bitcoin ecosystem. So the money 1.1 trillion is going to Chinese real estate, Chinese gold, silver, and Chinese basically equities. So that's why we are seeing uh, this gold going up, then Shanghai, their broad index going up, but we are not seeing Bitcoin going up. So this
How?
is more, yeah.
So if you compare their treasuries, if they would have, if China were to sell their treasuries and buy gold with that, versus like China infuses this huge capital, $1.1 trillion, and buys gold, how are these two ways of stacking gold different, and how will that affect maybe gold prices or US dollars? Any idea?
So
And why did they choose this? Like they could have sold US treasuries also because everyone
they
is
are
telling it's
selling.
not reliable. Oh, they're selling. Okay.
They have been selling. Even
Uh,
India is, yeah, Bala, go on.
yeah, does it have anything to do with like rather the broad strategies rather than the Chinese government going in and accumulating, like the central bank going in and accumulating gold? Through these policies, they want to like make sure households and other balance sheets like corporates keep accumulating gold in their balance sheet. Is this something to do with that strategy?
Retail is accumulating, but I'm not sure of corporate accumulating gold.
Okay.
Uh, I read somewhere retail is because this liquidity will go to public as well. So
How will
somewhere
they
here,
accumulate gold? Because the money is going to get to retail through banks, right? And banks will give
yeah.
money to retail or to corporates for as a loan for some productive use. Like China is a very high capital control market. It's not like US where you can just use money to do whatever you want to do. So unless governments don't want this kind of use to be done by retail, uh, like the money which you take as a loan usually does not go in investments. It's usually go in capital assets, manufacturing, like all of those things, right?
Um, I'm not sure this 1.1 trillion is similar to the US stimulus checks wherein US government directly gave people around 1200 USD in bank accounts. But this 1.1 trillion should be like trickle down might make sense here that they gave money in hands of banks and then banks gave loan to corporates, and that's how money in the end came to the people of China. And basically the money, this 1.1 trillion as a whole, if you think, the only way to go for this 1.1 trillion is Chinese stocks, gold, silver, and real estate. So all this is going up, but because China has shadow ban on Bitcoin, or there are ways where people can buy, but overall, it's very hard, I think, to buy Bitcoin in China. I know in Hong Kong it is like way easier, but I'm not sure about China. This is what I exactly don't know what's really happening in China about Bitcoin, but this is what this article writes. So I am taking Michael Howell, trusting Michael Howell here.
Okay. Yeah.
And also, what does it have to do with does the US moving a large amount of gold at the very beginning of this year, or like in the month of August, September, they sort of moved a huge volume of gold from COMEX into US. Does he talk anything about that, or why is US like seems to be not at all worried about gold's price, right?
This statement is very true. Like US is not at all worried about um, what's happening with gold. Also, in terms of Dixie, dollar index also went like down. Yesterday, Donald Trump made a statement about we are not worried of what's happening with dollar. I mean, this article basically talks about what's happening in China and the real reason why the current run in gold and hard assets like silver is happening because of what China is doing and not what is happening, what usually happens in the debasement trade. So in debasement trade, gold, silver, Bitcoin, stocks, everything goes up. Like assets usually go up and bonds crash. So, except Japan, the bond market is looking stable. All the Western bond markets are looking stable, except Japan. And if you see the global liquidity cycle also. So here Michael Howell makes a point that we have topped the global liquidity cycle in 2025. So the next the next 2026 is like liquidity will go down and um, basically global liquidity is going to go down in 2026. This is what he makes a point in here. So if you can see, liquidity has made a top somewhere here. I hope the graph is clearly visible here. Somewhere here liquidity has made a top, and Michael Havel suggests like this is not as usual a debasement trade, but this run is happening because of China, like whatever China is doing in the local economy. So like he is not talking about what's happening in the US and what's happening in uh, Western world and why the US is not concerned about what's happening with gold's price.
Okay, got it, got it.
Yeah. This is basically, or let me go back to the notebook LM. Uh, so yeah, slowing global liquidity in 2026. This was basically this chart. So in 2026, he expects global liquidity to go down, and he expects crypto is or Bitcoin is sensitive to the liquidity cycles. Uh, Bond term premia is stabilizing. Basically, bond is stable. This is what he is making point here. And the last thing is shift towards safe asset government bonds. So, because of these global liquidity trends coming down, people are again moving their money from risk on assets to risk off assets. I am not like, yeah, I know Michael Howell is one of the most like experienced person in macro, but if like US starts to lower rates, like this Jerome Powell gets removed, and if US starts to lower rates, uh, I think liquidity might go up. But when are the US midterms? I think they are in US midterm. What is the date? November 3rd, 2026. So yeah, yeah, I think Michael Howell would be right. So midterm is in November. So by the end, maybe in mid of 2026 we might see rate cuts, but yeah, that is kind of predicting what will happen. But in general, Michael Howell is expecting to like slowing of global liquidity, and this is where he takes a cautionary stance where like if gold and if Bitcoin comes down by 20-30%, then take some positions. This is what he says. And other risk on assets also, he makes a similar point that uh, basically if it is like global liquidity, if global liquidity is going to go down, then be aware, like uh, he takes a cautionary stance basically on this global liquidity kind of thing. Then coming to what's China's central role basically, PBOC, they this is what I was talking about. PBOC injected 1.1 trillion monetary inflation hedge for residents is basically gold. Uh, then this point, which Sandeep mentioned, is RMB based, basically Chinese renminbi based trade settlements using gold collateral. So this is the point where I think he mentioned that exchange rate managed Asian rates. So maybe China is managing CNY, so or RMB, whatever it is, and because of this, they are able to use gold as a premium, and maybe they are collecting physical gold in China. Then ban on onshore cryptocurrencies. So onshore exchanges have been banned in China. That's why we have not seen like Bitcoins move because of this Chinese injection of liquidity. Then this has also impacted Shanghai stocks and bond yields. Bond yields of China has been flat. So if you can see in this chart, so bond yields are relatively flat. Stocks have gone up. Chinese stocks have gone up. Then his investment outlook, short term 2026 liquidity is going to go down. Long term, global monetization of fiscal deficits. So the long term thesis is still intact. The debasement trade is still intact. So in the long term, he advises that like Bitcoin and other hard assets are being driven by liquidity, and nothing stops this train, as Lin says. uh, all the governments will not stop running fiscal deficits, and money printer will always go burr. Bitcoin as demand driven liquidity asset. So Bitcoin will keep doing its things when maybe after like late 2026, or maybe in the mid 2026. But what Michael Howell advises here is uh, 2026 is in general will be a down cycle in case of global liquidity. Uh, then monetary debasement is long-term investment strategy, not a short-term trade. So this he makes a point in here, where currently we have seen gold and silver rise in a short run, but this monetary debasement trade is a long term thesis. So just by seeing what Bitcoin is not doing right now, and by making a point here, Bitcoin is not moving, and yeah, what's happening, by just looking in short term charts, that does not justify what Bitcoin can do. So yeah, this was roughly the Michael Howell's thing. One geopolitical thing that I wanted to talk about. Um, uh, till here, if anyone has some questions, like feel free. Then I will share some of my personal opinion.
I had a question on why does Chinese government want retail to buy gold and themselves not they themselves don't want to hold gold. Is that because they feel that's like a better path for the country? Uh, and that's like a very uh, you don't expect that from a communist country that they would want their people to have a lot of assets. Uh, uh,
No,
so like what's playing out there? I would want to understand.
no, Saurabh, Chinese government is buying gold, and this 1.1 trillion injection, uh, this is not like China is asking its people to buy gold. Basically, this 1.1 trillion dollar injection has to find ways to, like, the money has to find ways to go in. So basically the only asset classes that are out there in China is stocks, is gold, and like silver. So like Asian people like gold, and that might be the reason people in China are buying gold. But this is not like Chinese government is not buying gold and pushing people to buy gold. Chinese government is also like stacking gold like crazy. Chinese government, Indian government, even I read somewhere the Polish government. So all the central banks are like buying gold.
Okay.
And
Yeah, Bala.
Tether is also buying gold like crazy.
Yeah, Tether is also buying gold. So this was one of the,
To add to what Setu asked, I think
yeah,
like because they have a close capital control system.
yeah,
Um like literally now they have uh, run out of investment opportunities. The real estate has the bubble peaked, and the government is actively diffusing that bubble in China. And I think the second most asset that people will want to hold in China is gold, um, because they don't invest much in stock markets. So I think that's why, I think the CCP and the PBOC have realized that they need another asset apart from real estate to funnel all the uh, at least savings and investments that come from their own citizen. And because they also have this Shanghai exchange, they don't have to shell a lot of forex like India does in order to satisfy that demand.
yeah. On that point, Bala, it really makes sense for India to have a physically settled uh, gold exchange.
Yeah,
But I don't,
given
I,
volumes, we should also have
yeah,
one. We should have taken steps like 5 years ago to do that.
yeah. Uh, any more thoughts or comments here?
I had a question a little unrelated to today's session.
Yeah.
So, Digan, like you collect all these all these URLs, and then you just punch them in Notebook LM, and it creates this diagram, or like do you tell them which direction do you want it to go, or it's just one research paper that you have read, Howell's paper.
So what I do, let me show it. Or maybe Saurabh, like we'll show it after the, like when
Session.
we end the recording. Would
Okay.
it make sense? Yeah.
Yeah. Good advice.
So yeah, if there are no comments, I had one theory or maybe something which I like. I think personally, uh, what is happening currently in the world is uh, two two worlds like two worlds have been started to become. One is BRICS and the other is Western group. And these BRICS nations, I would not say only BRICS, but many of Western economies have also started to hold, like buy gold, and their central banks have started to buy gold. But like there are very few central banks who have started, or very few nations who have taken positive steps with like in case of Bitcoin. I see only the US, which is like way far, way far when you compare it with other nations. Even if you compare it with EU, like these nations are way behind US. When you compare it with regulations and all related to Bitcoin, US is way ahead, and all other nations are seeing gold, and they are going back to gold. This is what I personally think. And maybe people in most of the developing nations uh, might be going back to gold, and this is one of the tether theory as well. So the reason why tether has XAUT is because the the people in tether think that before going to Bitcoin we might go to gold once again. So this is one of the tether's theory, that they talked in the Lugano school. Uh, I really I'm really tilted towards thinking that really we are going towards that direction, I think, because except US I am not seeing any large nation developing like developing things or doing some regulatory stuff related to Bitcoin. But in when you see towards gold, things are moving a lot when you compare what is happening with central banks and
Yeah, regarding this, one thing comes to my mind is that Luke Roman has been saying for so long that finally the US government, or at least interest groups within the government, have come to a realization that they the world cannot have US treasuries as their primary reserve. So
yeah,
they have come to a realization that they must incentivize the world from hoarding US treasuries. So only then can they bring back manufacturing inside the US and uh, uh, tone down their dependence on China for a lot of stuffs. So I like he has been saying it for so many years, like for the past 1 year, and I could see those things playing out because it is very strange that US seems to be very nonchalant about what's happening with the commodities and the dollar index going down.
yeah,
It seems almost it seems like it's by design, and even though they might not have figured out all the way in which it would pan out, but it is sort of going in a direction in which they are generally okay with.
yeah. uh, just a small thing. Jatin, can we stop recording? I think I have nothing to add on, so that we can continue the discussion, and maybe some people have some viewpoints which they can share here. You can stop recording and let me know when you. Yeah. Okay, great. And on top of that, Bala, we have Donald Trump. So the trust in US treasuries is literally going down.
No, I